Alrighty, folks, he's back. Last week, he warned you that it was going to be messy. And I would say this last week in the stock market was messy, and it might not be over. The jobs number was strong. ISM was weak. Thursday, we get CPI, and we are going to talk about all of that, of course, with Mr. Dan Bird. How you doing, sir?
I'm doing good. Yes, we will talk about that.
Awesome. Well, where do you want to get started? You told us last week it was going to be messy, and I think it's messy. Obviously, we also have completion of the first Santa Claus rally, I think.
Yeah, the second part of it finishes Monday. I'll actually show that. I'll show that first.
All right.
I know we got a short schedule today, so let's just jump into it. All right. You can see my screen, I assume.
Yep, we can.
So this is my website. If anyone's interested in getting my newsletter, just go to breakpointtrading.net. You can get the free newsletter right here on this button. If you want to register your email, then you'll get notified when it's available, but you don't have to do that. It's all free. I was at the VectorVest conference Friday and Saturday this week. And I was actually, they had internet service. So while I was sitting in the audience learning things, I was doing my newsletter at the same time.
Oh, wow.
So I actually got it out on time yesterday.
Nice.
So here's the Santa rally. Here's last year's. Actually, I'll show you last year's. There's 3 parts. It's actually the January barometer. This comes from Stock Trader's Almanac. And there's 3 pieces to it. The Santa rally, which is the last 5 days of the old year and the first 2 trading days of the new year. Then the next one is the first 5 trading days of January. This has been an old Wall Street criteria for years and years, that one right there. And then the third piece is the full month of January. And when all 3 of these are positive, then the year ends higher. And you can see all of them were positive last year.
This was for 2023. I'm guessing 2024 is not shaping up in the same way.
Yeah, so let's look at 2024. And by the way, this updates in real time. So every day there'll be one more added to it. And right now the Santa rally is a negative.
So that's 1%. Complete, right? So again, one of the 3 is complete. So negative 1.
Correct. That's right. And the second one completes tomorrow.
Yeah,
Monday. Yep. And you can see the line it needs to get above in order to be positive. Blue line right there.
Not happening.
Probably won't happen. It could happen.
Yeah.
I mean, we could get a big rally. There's some indications that the market might rally, which I'll talk about in a second. But
okay.
I'm not looking too good so far. And then the third piece is the full month of January. But I'll continue to track this as we move along.
I like it.
So let's take a look real quick at the S&P. And you can see here's the all-time high. Didn't quite get there.
Right.
I had been talking about this negative divergence.
You have.
For a couple of weeks now. I actually had a subscriber send me a note. I won't mention any names. Actually, I do want to mention one name.
You can always mention first names. You can always mention first names.
Okay, I'll mention a first name. He'll know who he is.
Yep.
When I was at the VectorVest conference this weekend, I was in the hallway talking to someone, and this guy walks up to me and he goes, "Are you Dan?" I said, "Yeah." He goes, "Dan Bird?" I said, "Yes." He goes, "Oh, I watch you and Zuber on Sundays on ORAT."
I love it.
So call out to Robert.
There you go. Shout out, cool. Robert. Nice.
Yeah, that was pretty cool. But this is a different subscriber that I won't mention any names on this one. He not that it's anything negative, but yeah, he said he subscribes to lots of different places, and he's trying to find one that will call the top and call the bottom. And I said, well, hopefully you're not going to find one.
Yeah.
And if you do find one, you should run as fast as you can the other way, because nobody can call tops and bottoms.
Yeah, that's tough.
Can't be done.
Yep.
However, I pointed out to him that I have been talking about divergences for quite a while. Not just this one, but others.
Oh, several. We go back, and you have a playlist on this channel that goes 2 years.
Right.
Every Sunday, like, I don't know, most Sundays, 50 out of 52. They go back and watch it. They can start at the beginning and watch the last 2 years unfold. It was amazing
Yeah.
job.
Yeah, that's right. So I said, look, I'm not calling a top, and I never will, because nobody knows what the market's going to do. But divergences are one of the few leading indicators.
Right.
Most indicators are lagging because they're based on price.
Yep.
So moving averages are based on the price, and the price has to move first before the line moves. However, divergences tell you what's happening underneath the market, tells you whether momentum is slowing down even as it goes in a particular direction. So in this case, the market kept going up, but momentum was slowing. Momentum was going down. That is an indication that the uptrend is coming to an end. Now, I can't tell you when that's going to happen. Yeah. I don't know exactly what day that's going to happen, but I've pointed this out many times, and anyone that listens will say, "Oh, looks like we got a divergence. I should pay attention to what the market's doing, because probably getting ready to roll over or getting ready to move higher."
Yeah. Okay.
So that's what happened. So one of the reasons I said we might get a rally this week is I've also been saying for a couple of weeks that the market needs to pull back.
You did.
It needs to revert to the mean. It will be healthy for it to do that. It needs to reset before it can move higher again. Well, the mean is this blue line, the 21-day moving average.
Yeah, it bounced right on it. Yep.
And that's right where we are right now. So Monday is going to be pretty important to see if that actually will act as support right there.
Okay.
And then leading into the CPI number. CPI is going to be the key one for next week.
Yeah, Thursday's a big day. Yep.
Thursday's a big day. So let's look at CPI. This is my website. These are all charts on here that are available to anyone that subscribes to the website. These are all stock charts, and they update in real time. So anytime you want to look at something, it'll be updated to whatever the current price is, even during the open. But I have one down here for CPI. There's headline CPI. Here's the one that will drop off Thursday.
Yep.
Very small.
Very small.
Now, what happens is this shaded area is the 12-month moving window of CPI. So when one gets added to the front end, then one drops off the back end. And then the rate of change for that year-over-year period is what gets reported.
Yeah. Hey, so forgive me. I did not get a chance to read your newsletter yesterday, so shame on me. What is the forecast? What is the expectations for CPI headline?
Oh, good question. That's a good question. Let me go actually into the newsletter, because I don't remember off the top of my head.
I think it was 3.2, but I could be wrong. Oh, there isn't one yet. Okay.
There is not one yet.
Okay.
But let me see. Might be able to do this real quick, because sometimes they update it over the weekend.
Sure.
Let's see if they have a new one. $3.2.
Yeah, that's 3.2. I saw that this morning. So again, I want to talk Thursday for folks, because again, last
so by the way, let me just mention this for a second and go back to this chart.
Sure.
Because this is a really good point right here, and that highlights what I've been saying for a while. Even going back a couple of weeks and talking to you about this. I said this one that drops off is a really small one. And what that means is this next CPI that's going to be reported could actually be higher than the previous month.
Right.
I've been saying that for a while. At a minimum, it's going to be flat.
Right.
Well, they are now forecasting it to be higher.
Exactly.
So what's going to happen? What will the Fed do now that inflation is ticking back up? Jobs are stronger than expected. The economy is not slowing down like they wanted. Are they going to raise on February 2nd or February 1st, rather?
No chance. No chance.
No chance, you say.
Zero chance.
Zero chance, you say.
0.0 chance.
Okay. You want to get any more specific? You want to put some more decimal points on that?
Yeah. Yeah. Okay. 0.001. I don't know. But here's the deal. I actually think the job market is far weaker than the 216,000. I think the ISM number from Friday was actually more important than the jobs number, and that was horrible. The ISM number was horrible. Prices paid, new orders, employment, all variables horrible. So there's no chance they raise January 31st or February 1st, whenever the meeting's over, in my opinion.
You're probably right. Here is the ISM number. It wasn't horrible, but it was lower than expected.
Yeah, but if you go inside that number to new orders, to employment,
right.
They were bad. They were in retraction.
Right. I mean, definitely the market is slowing down. 216 on jobs. I mean,
10 of the last 11 jobs number have been revised lower. We've lost
and this one probably will as well.
Exactly.
If you look at the numbers, the majority of those came from government.
Yep.
So yeah, that'll probably get revised again. But I have a jobs chart in here, and that's one of the recession watch charts.
Oh, for sure, as it should be. It's
you
the
can see
last thing to fall.
Actually rolled over and went down.
It did.
Hasn't crossed yet.
Yeah.
So we'll be watching that.
So let's talk about CPI again. I want to talk about Thursday.
Okay.
Because again, you've been warning us. We've been talking about this, but let's just have it out. The market's going to call 3.2, and let's just say it goes up, right? It goes up from 3.1. The good news is the market's expecting it, but it will just be what I think happens Thursday. This is what I think happens. All of the March calls for rate cuts get pushed to May. That's what I think happens this week, right? The market's asking for 6.
That's the month I said they would start.
Yeah, exactly. Yeah. So I think that's what happens Thursday.
Yeah, I don't disagree with that. I think that probably will happen. I think the number that the street is expecting of cuts next year will go down as well.
Correct. Thursday. Yes.
Right. I mean, I think 3 is probably reasonable. I don't think more than 3 makes any sense.
Yeah, 3 or 4. But yeah, that's where I'm at.
Right.
3 or 4. Yeah.
But
let's do one more thing for folks, because again, I think 3.2 feels like a good number. I actually think we'll have a 2 handle in a month.
Yeah. So here's the next one. There's the one that drops off in February. That's a big one.
It is a big one.
So yes, I think we will have a 2 handle also in February.
Yeah. So I think the Fed knows that, hence no rate increase.
Yeah. I think the market knows that as well.
Yeah, I would hope so.
But even so, I mean, the market may use this 3.2 number, even if it comes in at 3.2, which is what they're expecting, may use it to.
Can you do me a favor and look at the 10-year note? I know that's a chart you have on your website as well. Sure. The 10-year was all over the place on Friday. Went up, went down, finished up for the day.
It finished, actually finished even for the day.
Okay.
Let me see if I can.
I think it was up actually, but that's okay. Doesn't matter.
That's a 5-minute chart. So here's Friday right here. This is what you're talking about. It was down, it was up. Actually,
it raced higher and then came down with the ISM number and then finished up for the day.
And then went back up.
Yep.
But it's hanging out in this area, and notice how the moving averages are starting to curl up. So I think it's going to probably hang out around here for a while.
Okay.
There's resistance right there. And here's support. And I think it's going to bounce between those 2 lines right there for a while.
Yeah, that makes sense. Again, this is all, again, I think what happens next week is the market punts on the March rate cuts, and then we all coalesce around May or June, and I think that makes sense to me.
Absolutely. I've been saying that for a long time.
Yeah, you're going to be right again. It must suck to be right so often.
It's all in the charts, man. It's all in the data.
All in the charts.
It's all in the data.
Can you look at commodities real quick?
Actually, yes, I do want to look at that. In fact, I'm going to do that by looking at my Fed rate hikes chart. I put this in the newsletter.
Oh yeah, there you go. Yep, that's
So
the
here's
one.
oil and gas. The shaded area is what the CPI number is going to reflect on Thursday.
Ooh,
So
okay.
it dropped dramatically, but then it came back before the end of the month, but it was still basically flat or a little bit lower. So
Yeah, a
this is the
little bit.
one thing right here that might save that number
Yeah,
for
could.
CPI.
Yeah,
The
oil. I
CPI
mean,
could
yeah, it
actually
could
come
come
in
in.
flat. CPI could come at 3.1
Yep.
and beat the forecast
Hmm.
on Thursday.
For sure.
And then it
Yeah.
started dropping off, and now it's starting to just very subtly starting to curl back up again.
Yeah. I'm gonna
And
tell
the
you, I don't know
energy
what
sector is starting
is.
to show some life too.
Yeah. I wonder what GDP now is calling for Q1
You can look it up.
forecast. I'm looking at it right now.
Here's the XLE energy sector. You can see it actually came down Friday, but it's been on a little bit of a run the last couple of weeks.
GDP for Q1, according to Fed now or GDP now, is 2.5%.
Okay. That's reasonable. I mean, all that's Goldilocks. These are all Goldilocks numbers.
Yeah, I agree.
So,
Yep.
what else? CPI, we looked at that. Jobs, we looked at that. I want to look at the McClellan oscillator.
Okay.
This is a reflection of, and this is a good example of divergences, which I've
Hmm.
talked about.
Hmm.
McClellan oscillator tracks advancers versus decliners. So when there are an equal number, and this is for the New York Stock Exchange, when there are an equal number of advancers as there are decliners, then it's at the zero line. It's balanced.
Mm.
So if there are more advancers, it's above zero. When there are more decliners, it's below zero. Right now, it's below zero.
Mm.
In fact, just last week. So it changed this to red last week.
Okay.
But notice the divergence lines that I pointed out last week and the week before.
Yep.
So this is the market. This is the S&P. S&P was going up, but it was going up with fewer and fewer advancers.
Mm.
That's a negative divergence.
Right.
So no, I don't call tops and bottoms, but I
Just
certainly give
trends.
just trends. That's exactly right. I just call the trends, and that's what I am. I'm a trend follower.
There you go.
I don't want to capture 100% of this move.
Yep.
It's impossible. It's impossible unless you're lucky.
Right.
I
Yeah.
like to capture 70 to 80% of the move, though.
Hmm.
So we're now below zero. So there are more decliners right now than advancers. So we'll have to watch that. Again, we're sitting right on the mean. If we look at the Keltner charts, this really brings it in.
Oh yeah, look at that.
I mean, this is again, you can see the negative divergence once again. But once we get up above, this is a 4 times the average true range up here. It doesn't stay there very long, and it normally reverts to the mean. So this reversion to the mean over here was the market just went sideways. It didn't
Right.
come down. It just went sideways and reverted to the mean.
Yeah, the mean came up in that
Right. The
case.
mean came up to meet it. In this case, it's actually come down to the mean. So that's the level right there that it will either find support and bounce, and we're headed back to all-time highs, or it will drop through and go down to the bottom part of this channel.
Okay.
And I can't tell you which one it's going to do.
Yep.
I don't know. But all these things starting to curve up tell me it's hanging out right on that support level. So it could very likely bounce back up next week.
Okay.
All right. Market bias. I want to show you that. This is something that I put in here a few months ago. And this is kind of something that I created. I look at this every single day. I update this every day, separated by categories, indexes, sectors, industry groups, intermarket relationships, commodities, metals, and currencies. And whenever something changes on that day, it'll be highlighted with a box.
Got it.
So look at all the red that happened on Friday. This is short term, medium term, and long term. So short, and usually it goes in that order. It changes short term first, and then the medium term changes, and then the long term may or may not change depending on how strong that long term trend is.
Right.
But right now, NASDAQ and the NASDAQ 100 are bear. Russell growth is bear, and transportation is a bear. Semiconductors just changed to bearish. Artificial intelligence just changed to bearish. Software had already changed last week.
Yep.
The one that went up in the industry groups, interestingly, is healthcare. So the way you can use this, when I had a subscriber send me a note saying, you know, I noticed on your bias chart, you show where it changes every day. Would it make sense for me just to watch the short term? And when I see something change in the short term, then I should start taking positions? Yes, that's what it's all about. That's what it's for. Yeah, so the NASDAQ just changed to bearish. Maybe go short the NASDAQ right now. If you want to wait for confirmation, wait for the medium term to change. And I pointed out that these over here on the left, these are all links. So if you want to look at the NASDAQ 100 to see what it looks like that made it turn bearish, just click on that and you can see right here, the 8-day cross the 21-day.
Yep.
That's the short-term bearish signal.
Okay.
He didn't know you could click on the links and see those things. The other thing is I've tracked these over time. This is, I think, 2 months or so, a little more than 2 months. And you can actually see how the colors change. You can see how much red there is right now.
Yeah.
Just in the last 5 days, it's changed from green to yellow to red. And then the chart over here charts the short term, medium term, and long term. And you can see the short term is just dropping through the floor.
Okay.
So that's normally what happens. The short term will move first, then the medium term, and then the long term. All right. So keeping that in mind, what do we got? Okay, we got a little bit of time. Keeping that in mind and seeing that healthcare, for instance, just got a long-term bullish signal. Now it's already been short-term bull and medium-term bull. So the long-term bull just confirms this trend, but it also could mean that this short-term might start changing to bear, right? So let's go look at healthcare. So if we go back to the charts and we look at the healthcare sector right here, and we'll look at that healthcare chart, and you can see how strong that trend is.
Wow.
So it just changed to a long-term bull. That's because the 50-day crossed the 200-day. That's a golden cross right there. Yep. But the short term happened way back here in early November. So if you had been watching that bias matrix, you would have seen bear, bear, bear across the board. And then all of a sudden here in November, you would have seen the short term change to bull. That was the alert. Maybe I should take a position in the healthcare. This is an ETF, so you could have bought XLV. And then the medium term change right here. And now the long term has just confirmed it, but you could have ridden this whole trend all the way up right here. And that's the way to use that.
Cool.
And, you know, in healthcare, these are all the industry groups. Every day I also show which ones have got short-term signals. Yep. So the red shows a short-term down signal and the green shows a short-term up signal. Mostly we have reds today. Yeah. So that's indicative of a market that's, you know, pulling back, selling off, etc.
Can you take a look at Nvidia? Is that, do you
Yes.
still own that, or did you get?
Oh, I still own that. I probably will never sell that.
Okay.
So down here we have, this is very similar to that bias matrix that I just showed you, but now it tracks a short-term, midterm, and long-term for the Magnificent Seven.
Oh, that's nice.
Okay. So we can see that Amazon, Apple, Microsoft, and Tesla already had bear signals. SMCI just on Friday got a bull signal. All right, and there's Nvidia. It's got bulls all the way across the board. And then you come up here and click on Nvidia here and see the chart. So what you'll notice in this chart is the channel that it's been in. A couple of things I want to point out with this. So there's the channel. It's getting right near the top of the channel, $500. Here's a cup and handle. For those that follow Investors Business Daily, this is a make the handle now looks like that. And the way to, first of all, the way to trade a cup and handle is after it breaks out. So you want to see it break out of the resistance level here with volume. Volume is picking up a little bit. We had an up day on Friday. But if it does break out, then the way to determine the target is to take the bottom of the cup, which is at 400, and the top of the cup, which is at 500. And that's the distance it should move to the target.
Oh, wow.
100 points, so it should go to 600.
Yeah. Okay.
Now, Nvidia, and I said this last quarter, Nvidia normally always moves higher before earnings.
Yeah, pre-earnings, yep.
And I'm not sure when Nvidia earnings are. Let me see. Actually,
Kind of off cycle.
Actually, the new stock charts has some really cool things, and they've got some other stuff that are coming. That's just amazing. But one of the new things that they just added here is it shows you the last earnings right up here, and it shows you when the next earnings are.
February, yeah.
The next earnings are February 21st. So we're
6 weeks,
5 or 6 weeks away.
Yeah.
So I would not be surprised to see this start moving above 500 sometime in the next couple of weeks and keep moving up into earnings.
Okay.
That's normally what Nvidia does.
All right. Very cool.
So pretty cool.
Dan,
huh?
we've got to wrap it up today.
Yeah, one last thing I
Please.
want to show before
Go ahead.
before you go.
Mhm.
I've got this set up because this is kind of important. I put this in the newsletter as well. This is the put call ratio. This is a 1-year period. This goes back all the way to 2005 back here. Put call ratio shows you the number of puts versus the number of calls. Okay. So since it's a put call, if the line is going up, that means there are more puts than there are calls. Or there are more sellers than there are buyers if the line goes up. Okay. So if you'll notice right here in 2022 where we had a bear market, look how steep that line went up. Those are all sellers during that period. After COVID, look how steep the line went down. Those are all buyers. So when the line goes down, you can follow. I drew the vertical lines there. You can follow this one down here. It was a 62% gain for that line right there. So this line is now just started. It came down and went back up, and now it's dropping off a cliff right here. See that?
I do.
Going nearly straight down. Now let me overlay on this VectorVest. And VectorVest has these confirmed call signals. And if we look at this right here, this confirmed call here was from actually the one back here was May of 2020. So that's this green arrow right here. Yep. That's May of 2020 right there. So that whole run all the way down here was this whole run right here. VectorVest gave a confirmed up and it just kept moving up. And then this signal right here is on November 22nd for a down signal. And that's right about where this bottomed and started to move up. So when it moves up, the market goes down. We just got a confirmed up signal in VectorVest right here, and this is starting to drop off a cliff. So even if we do pull back some more right here, I don't think it's going to last very long. In fact, it may not last past the CPI number next Thursday. And then I think we go screaming higher back to all-time highs again, over 5,000.
All right. Well, that's fun. You're going to be coming back each week to have these discussions. I appreciate you. Share your website one more time.
Oh, sure. It's Breakpoint Trading at, where are we here?
Too many windows.
Too many windows open. Hang on. Here we go. Okay, breakpointtrading.net.
Folks, go there today, get the free newsletter, and if you register, you can see all of the charts. Dan, I appreciate you, man. Thank you.
All right, have a good weekend.
You too.